Hi everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Thank you very much everybody for liking and subscribing and pressing the bell. You'll notice I've got 246 subscribers. Please don't let that put you off, guys. The channel's only been going for just over a month now. I've been in the crypto space for many years, and I've been working with some of the most, if not the most, recognised influencers in the crypto space. And now, obviously, sort of branching out to do my own YouTube channel. So this is all very new, guys. So please don't be put off by the number of subscribers. Please like, subscribe, give me a chance to watch a couple of my videos, see what you think. Hopefully, I'll provide some value, and you'll find them interesting. Just to mention, guys, my NFTs are still for sale over on OpenSea and also on Rarible. Links to that are in the description below. And you will note, obviously, what the prices in the market coming down, that it's quite good value to pick up one of those NFTs at the moment at the current prices. I am on Twitter. This is my handle at Crypto Mainly, and please do follow me over there. And I will be providing regular updates with some charts and things, chart setups and what have you, moving forward. So thanks ever so much, guys, and let's jump straight into the content. Okay, guys, so these are the charts we'll be looking at today. This is my scribbly daily chart that we'll talk about briefly. We've got this one, which is obviously a nice bullish pattern here. We'll have a look at Bitcoin dominance and Tether dominance, even though some of us may not want to look at that. And obviously, we're going to have a look at a couple of the sort of mid to long term charts, which I've been talking about for some time now, just to give you an update really on where I think we are in the cycle. Obviously, seems to be becoming more and more important. It's very difficult to judge what's happening with price at the moment, but when we look at where we are in the cycle, that does actually shed some light and might give us some clues as to what's going to happen next. So looking forward to showing you that in today's video, guys. So please stick by till the very end, and hopefully there'll be something interesting that you find throughout the course of this video. Okay, so it's been interesting over the last couple of days. Obviously, somewhat scary. Prices seem to be keep collapsing, keep coming down. Obviously, mostly driven by the fiasco with Luna, and obviously the UST stablecoin having its depeg from the $1 value. I mean, that's mostly what's driven the market down, in my opinion. Obviously, the Luna Foundation have sort of cashed in on 1.6, I think it was 1.6 billion dollars worth of Bitcoin, which obviously meant that there was a sell off, and obviously this is the result of that. We've been talking about this trade. This is my trading chart, guys. So that for those of you that don't know, this is a bit scribbly because I use this chart daily to trade with. I'm sitting on my hands a little bit at the moment because things are looking quite scary on the face of things as we break down below key support levels. But you will note actually this is on the Binance chart, and there are some variations to this low as we look at different charts, guys. So do just bear that in mind, please. But this is the Binance chart, and you'll see that on this low, yeah. So you'll notice on this low here that that low is actually 28,805. It's the purple price there. And I mean, at the moment, prices are trying to sort of sneak down below that. But I think that the chart that we need to be looking at, certainly the one that I'm sort of putting my focus on at the moment, is this one, guys. And you'll see here, in the last couple of videos, I have adjusted these lines very slightly, just to sort of reevaluate things. But once again, guys, we've spoken about the Wyckoff scenario, and that we're going to get some kind of spring. If we, from a market maker's perspective, this is a beautiful pattern that they've created here. And as long as we are anywhere below this low here, so on this chart, incidentally, it's the red number there, which is 29,250, compared to the 28,800 on this purple chart here. So this is Binance, and this is Bitfinex, and of course Bitfinex is where most of the whales are. So you can see that as long as price is sort of creeping below this very low of this wick, this is like the ideal bear trap scenario. Because as long as we're down here and people are starting to watch out for this capitulation candle and things like that, which everybody seems to be waiting for. Once the prices are down here, there's going to be lots of people opening short positions on Bitcoin. There's lots of people waiting for this capitulation candle to happen. It could happen. It's looking like it is going to. But I think on the face of things, if you look at this is a bullish pattern, and as long as we're above this support here, even if we got down, I mean, if you look, we could still be in the triangle here and still be even down to I mean, we won't get. It'd be very unlikely to get right to the end of this triangle, but you'll see that it's possible that we could even be sort of 25. So where are we? Let's say, I mean, the wick low that we've already had. We may look back and see that and find that was the actual the low, which came down to 26,590 on this chart. So that's this wick low here. Okay, we may look back in time and that may be the low. We may not actually come back below this low again. In fact, what I think I'm going to do is I'm going to mark that wick low there on the chart. And I'm going to make that a different colour so it sort of stands out a little bit. So this blue dotted line, we may see that prices sort of bounce around inside here. All the people, a lot of people in the market will be loading up on their shorts. The altcoins have taken an absolute battering off the back of what's happened, and I can just see that once everybody's sort of loading up on their short positions, and there's enough short positions for sort of opened, and the open interest is at that particular level, that the price will just take off and leave people that are waiting for lower prices, leave them behind. There are some other charts which I'll come to, guys, so please stick with me and I'll show you why I've come to this conclusion in a bit more detail. Okay, so moving on to the dominance. This is something which, this is exactly what we didn't want to see happen, guys, unfortunately. I have to deliver, the message from the charts and, and not put my bias on things because, obviously that would be unfair to you. But this, us breaking through this resistance here and continuing higher, this is the worst thing that we wanted to see really for alts. So what I'm going to do and how I'm going to trade this is I will be watching for rejections, because we'll very likely get rejections from the resistance on the way up. We'll get some retests and things. So as we get to the different sort of key levels, here, 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 as we get to those levels on the way up, we'll get some rejections from dominance. And whenever we get the rejections of them coming down, that's when I'll be looking to take some altcoin positions to try and take advantage of these downward movements on dominance, to try and get some price, some wins out of the altcoins. But I mean, this on the face of things, guys, this is basically now suggesting to me that we are going to get a Bitcoin season rather than an alt season. Yeah, so this is it may be that the Luna situation. I mean, everybody in the market's blaming everything on Luna at the moment. It's not it's not going to be entirely all to do with Luna, but it certainly was a catalyst that sort of turned the market around, and it may be that that's what's created this spike in volume. Okay, so we'll take a look at Tether dominance. I mean, wow, guys, this is literally exploding at the moment. I mean, it's understandable if you think about it. The people that have got any kind of pairings with UST that looking to sell out of their, for example, their Luna positions, won't be selling back into UST from Luna. Obviously, what with it collapsing, they'll be moving they're likely selling their Luna and holdings, into USDT, which is obviously what's causing this big spike. But nonetheless, I mean, these are new highs. We've broken through resistance. You can almost say that the US, the Tether dominance is now in price discovery here, and we don't really know where that's going to end up. You can use some fib levels and things to give you an idea. But I think that the market at the moment has got so much going on. There's so many ingredients into this that we can't, foresee. Luna, no doubt, will be trying to sort out their issues. They'll be trying to repeg the UST stablecoin, and they'll be trying to sort out the overall picture so that it saves the Luna token. It'd be a shame if Luna fails after the successes that it's had. But it's very difficult to try and judge what's going to happen here. We were hoping for a rejection from the top here, and for price, and for the Tether dominance to come back down, and that hasn't happened. So I mean, this on the face of things would suggest, if as this climbs, is that more money comes out of the market from Bitcoin, Ethereum, and the altcoins into the stable coins, which would mean that that would translate to being further downside in the market, unfortunately. Okay, so there's obviously a lot of doom and gloom and things, guys. But I think if we look at the market in terms of the cycles and where we are in the cycles, it might give us a bit more of a clue as to what's going to happen next. Now, this is something which I've posted, going back, from when we were, the prices were around this level here, and what you can see basically this chart is showing. If I just take off some of the indicators to make it a little bit clearer for you, you can see that this is the bull market support band, and basically what this is showing is if we add the 50-day moving average onto here, any time that we've seen the bull market support band cross below the 50 moving average, which is inside the circle there, so the bull market support band's crossing down, bull market support band's crossing down below the blue line, so the blue line is the 50 moving average, so inside the circle the bull market support band crosses below the 50 moving average, and the same here. COVID Black Swan, it did happen again, but so it's a bit of an unusual one to take a measure on, but it was still comparable, even though. So you can see that once the cross has happened, over the course of about 154 days, we had a 70% correction in the Bitcoin price. Here, same again, but 168 days, so a little bit longer and not such a deep correction. The COVID crash obviously wasn't as deep a correction again. And obviously happened very quickly, but that was a black swan event, really. But I mean, what we're looking at here is that the bull market support band has crossed over below the 50 moving average again. So that the measure from the cross, if we measure down, you can see that the actual corrections are getting less. So you've got 70% there, 62% there. So I've taken, that's been reduced by 8%. So taking 8%. Off of here again would bring us to somewhere between around about the sort of 54% mark. But I've gone a little bit deeper than that, up to 58%, as you can see. But what you'll notice on here, guys, is that it's taken 154 days, 168 days for this to happen. And admittedly, we've now had this, this lunar situation, which may have accelerated this. But if you were to take this based on the last couple of moves here, not considering the Black Swan event of the COVID crash in 2020, but if you took these timeframes here, you'll see that this is we're a little bit ahead of schedule for us to be testing these lows at the moment. And in actual fact, that the lows should come towards the end of this year, September, October, November time. So I do still think that we are going to get this bounce up into the bull market support band, and then the lows come later in the year. And the reasons for that, if we look at this chart here, this is something as well which I've covered in the past, guys, but for those of you that haven't seen it, from the high to the low, you've got a measure there, 413 days, high to the low, 357 days. So these two measures here are from the two peaks. We've got a 65,000 peak, which was the first one, and the 69,000 peak, which is the second one. The first peak, incidentally, is the one which was an organic peak. The second one is one which was created by the market makers to fool us, in my opinion, and I'll tell you why I think like that in a few minutes. So we'll come to that, guys. Okay, so high to low, 413 days. High to low, 357 days. The average of these two is 385 days, as you can see here. And interestingly, if we measure from the 65,000 peak, the retest of the low that we would be expecting as an average of these 2 days here, 385 days takes us to almost perfectly where we are, retesting the lows of this range at the moment, which obviously, which takes us into May. If we went by the 69,000 peak, we'd be expecting something, towards the end of the year, sort of November time. And I do think, guys, this is what I think is going to happen. We no doubt, obviously, now we're experiencing the first low in May, but I do think we're going to see something where we come up to retest the bull market support band. And we get rejections of things, and we come back down, and maybe the lows that we create here will be lower than these lows here. Okay, so we've got lows here, and I suspect that the lows here, these lows here, I suspect will be when we're looking at the low at the mid, the low 20,000 mark. So, between sort of, I'd say between 22 and 24,000, I think is what we'll see. But I do think that we're going to have a summer where we bounce up, we retest the bull market support band. Okay, bull market support band, incidentally, at the moment is somewhere between 40,800 and 44,500. We may even get a little bit above there. I wouldn't be surprised if we did just get just above the bull market support band. If we do, then I'd be looking at the 200 moving day. We'll likely reject from the 200 moving day, and then we'll come back down to the lows towards the end of this year. That's what I think that's where I think we are in the cycle, which will then give us the run up. Just another point of interest, guys. If we measure 60 foot, so the peaks at the top here, so the high, if you like, of that cycle to the break of the high is 1,190 days. This one is 1,085 days. So again, an average of the two. We add that at the top here. So from the first peak, which is the one that I think is the valid one, which we should be looking at, takes us interestingly to May 2024. And for those of you that don't know, the halving is in May 2024. So I wouldn't be surprised to see if we actually start to, to trickle up towards the halving, and we actually break the all-time, we create a new all-time high at the halving in May 2024. So if we look at this chart, this is based on the last three bull runs, and you'll see that you get 51% of the bullish move before the halving and 49% of the bullish move after the halving. You then get a bear market of around sort of 400 days, 360 days here. So you've got 400 days here. So if we go based on the last couple of cycles, you'll see actually there's something which is quite interesting. If you notice on the bear market, you get like a continued. So this gap, this white area is the bear, and you'll notice. So from the peak, you get like a continued. You do get some bounces along the way, but you get a continued sort of gradual decline up to the run up to the next halving, and the same here. From the high, you get you get bounces along the way, but you get a gradual down, and then you get the lows at the beginning of the run up to the next halving. Okay, and here, interestingly, look, we've got for the first time, we've actually got a retest of the lows mid bear cycle. So that's different again. We had two peaks, two highs, which was different to the last cycles, and it looks as though we're going to get a low followed by another low at the end of this year before we then get the run up to the next halving. And you'll notice here, guys, something which I've covered before in the past, so I won't go over it again too much. So interesting, guys. I play around with the numbers a little bit, but it's interesting to see that the prices, the first halving were around the sort of $9. Second halving was around the $900. The next halving was around the $9,000. It would be interesting that this measure here, looking at 105,000, so around the $90,000 mark. So if we do come up, we get the bounce again, then we get the run up gradually up to the next halving, and there'll be peaks and troughs along the way. It'll be interesting if we create the new high at 90 to 100,000 in May 2024, which would line up with this here, this projection. So from the 65,000 peak, so from the first peak, we had the 100. The mean of these two is 1,134 days. So from the first peak, the measure move there comes out and suggests that the break of our high of this cycle high would come at the halving. So interesting little notes for context there. But okay, guys, I'm going to leave it there. Hopefully you found something interesting in the video today. Thank you very much for liking, subscribing, and I appreciate every one of you. It's nice. I enjoy doing the videos every day and look forward to doing them for you in the future. So thank you very much, guys. Please do like, subscribe, turn on the bell, and I'll see you again tomorrow. Always remember, guys, probably a bad time to say this, but take profits and buy something real. Take care, guys. See you tomorrow.